Hey, good morning everybody. Today is Wednesday, April 27th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is, and to that end we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 10 came from exploration and production, that's oil exploration and production. 7 came from semiconductor devices, 7 from managed care. We had 6 from diversified chemicals, 6 commercial vehicles, and rounding out the top 5, we had auto parts distributors, also with 6 stocks in the 100 most powerful stocks in the most powerful industry groups. Oil exploration and production seems to be a good place to be looking for leadership these days, as does semiconductor devices and managed care. Let's start today by taking a look at the Russell 2000. The Russell 2000 had a very good day yesterday. It was up 12.63 points, or 1.11%, well over a full percent. Notice how it closed at the very top of its daily trading range. This is bullish. We closed at 1150 and we seem to be trying to put this area of resistance in the 1140 range behind us. If we're able to do that, the next significant level of resistance is the old high in the 1205 area. As we've been noting, the Russell 2000 seems to be the key to the market going forward, and the Russell 2000 has certainly been acting a lot better recently than it had been in the past. It's worth keeping an eye on. Let's see what the NASDAQ Composite's up to. But before we do that, small cap stocks had a very good day yesterday as stocks closed mixed on heavier trade. The S&P 500 recorded an accumulation day, or a day of professional buying, while the NASDAQ avoided distribution on a technicality. In order for a distribution day to occur, an index has to sell off at least 0.21% on heavier trading volume. The NASDAQ yesterday was down 0.15% on heavier trading volume. The S&P recorded a golden cross yesterday. A golden cross is when the 50-day moving average crosses above the 200 and is generally considered a long-term bullish event. That noted, distribution in the market remains a concern, and the current market outlook is an uptrend under pressure according to investors.com. Our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. The lack of names on our universal watch list remains a concern. We added another stock to the list yesterday, which brings our current total to 41. In a healthy market, we'll generally have between 50 and 90 stocks on the universal watch list. The weakness in our universal watch list indicates weakness in market leadership, although the trend seems to be more bullish. Advancing issues outpaced decliners by nearly 7-2 yesterday. The New York Stock Exchange advanced decline line continues to look bullish. New highs bettered new lows. According to our Ramosi ratio, small capitalization stocks bettered large again yesterday and continue to outperform on a 10-day moving average basis. This is a bullish indication. Bulls prefer to see small caps outperform. The market appears to be struggling to define a short-term direction recently, although yesterday was constructive. We remain cautiously bullish. Traders may want to take advantage of any weakness that develops in the market to add to or tweak their portfolios, but as always, be careful and keep your stops in place. Okay, yesterday the NASDAQ Composite was down a little bit more than 7.5 points, or 0.15%. Notice that it didn't reach the 0.2% threshold necessary for a distribution day. We closed at 48.88. We tested resistance up here in the 4900 area and failed. We tested support at this long-term trend line. This trend line goes all the way back to the beginning of the bull market back in 2009 and held. Again, the NASDAQ Composite remains in this no man's land between the trend line and resistance at the 4900 area. Trading volume yesterday was higher than the prior day, which would have given us a distribution day had the NASDAQ fallen 0.2%. Right now, for you followers of William O'Neill, the NASDAQ is indicating an uptrend under pressure. We've been in an uptrend since February 18th. We now have 5 distribution days on the NASDAQ. 5 distribution days is a lot of distribution, and that's the reason that the uptrend is under pressure. The NASDAQ appears to be bracketed by support at this trend line and resistance in the 4900 area. Were we to take out resistance in the 4900 area, the next significant area of resistance is going to be the 5164 area. Let's take a look at the S&P 500. But before we do that, let's add a 50-day moving average to the S&P. Yesterday, the S&P 500 was up 3.91 points, or 0.19%. We closed at 2091, closed right about the middle of the trading day. Trading volume was above the prior day, giving us an accumulation day or a day of professional buying. The S&P is currently in a market uptrend under pressure. We've been in an uptrend since February 18th. Notice we have 6 distribution days on the S&P 500 in the past month. That's a lot of distribution, and that's the reason that the uptrend's under pressure. The S&P appears to be bracketed by support down here in the 2044 area and resistance up here in the 2116 range. Our market timing model is indicating a buy signal on the market, which indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Before we go, I want to take a quick look at Paycom. Paycom software provides cloud-based human capital management software that manages employment lifecycle for employers and employees. The stock yesterday traded higher trading volume than any down day in the past 10 trading sessions. Notice how it came down. It tested its 200-day moving average and its 10-day simple moving average. We show the 200-day moving average in black, the 10-day simple moving average in green. It held those areas on pocket pivot volume, which may provide a buying opportunity for aggressive traders here. Paycom's not in any real identifiable basing pattern, although we could, I suppose, call this a long-term cup with handle forming. It hasn't formed yet. We need 5 down days in the handle, and we want to see volume dry up in the handle. Not a very solid cup and handle formation, but it is a good pocket pivot. Paycom may be of interest to aggressive traders. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.